Hey guys, so today I want to show you how to trade using the TDI levels. I know there's a lot of different ways to trade, but you should always have more than one way to get to the same destination. Okay, so today I want to talk about how to use the TDI levels. We're going to be focusing on the 63 and the 37. Okay, we're using these levels to determine what trade we should take. I wrote a couple of things down. All right, so first thing. All right, so we have the Bollinger Bands on here. Okay, so this is going to help you out. Let me zoom out a little bit. Now I'm zoom in. Actually, I need to pull this down. So the Bollinger Bands, I like to give words that are to use words that are easy to understand. So when the clouds, I call the Bollinger Bands clouds. When the clouds are under 63, you should be looking for sales. So when the clouds are down here or anything under here, you should be looking for sales. Like example, this time over here. You see how this is 63, but the Bollinger Bands are under here. You should be looking for sales. All right, all this from here all the way to here, you should be looking for sales. And then vice versa, when they are above 37, you should be looking for buys. So when the Bollinger Bands come above 37, you should be looking for buys. Okay. Now, next point is the RSI. The RSI represents price on the TDI, exact correlation. Okay, when the RSI goes under 63, you should sell. When the RSI goes above 37, you should be looking for buys, and you see that happen a lot. Okay, but this takes patience. And as you can see, my terminology says goes, which means that at some point it was above. For the 63, at some point it was above 63. So you have to be patient and wait for the RSI to go under 63. All right, and then for the bottom, when I say goes above 37, that means at some point it was under 37. Okay, and let me give you some examples. You see them happen every day. All right, so here's one. RSI was under 37, it goes above 37, you could buy there. Got your 265 pips. This is obviously gold. All right, now this one is the application of the first thing that I talked about with the clouds being under 63. All right, so you got the clouds under 63, you got the RSI coming out of the clouds, coming back into the clouds. That's a sell. And that thing dropped all the way down beneath 32. Okay, so those two trades, 260 here, and then another 740 plus. That's 1,000 pips just by using this way to trade. Okay, now if you want to get even more, why is this here? If you want to get, why is this line here? Oh, if you want to get even more technical, or you want to use it on the bigger time frames, it works as well. And it works in a great way. So here's an example here where the clouds fall beneath 63. So whenever the clouds, which is the high of the TDI, whenever the clouds are beneath 63, you should only be looking to take sales. Okay. Whenever the clouds get above 37, you should be looking for buys. Now you won't be able to just you won't be able to just hold trades for long. You still have the intraday trading situation, but these trades work. Okay, and then the second part is the actual RSI. When the RSI comes beneath 63, you should sell. All right, when it comes above 37, you should be buying. Okay. Now now mind you, this is not a long-term situation because there are, as you can see here, the RSI can come under 63 within an uptrend. This is definitely the setting up of a bigger W. So you gotta use these two perspectives in tandem with one another because they can work hand in hand. So you may get a sell because the RSI comes beneath the 63, but if the clouds are above 37, you have to still close that sell and then go for a buy. All right, real simple stuff. Nothing complicated. As you can see here, clouds came above 37. So all of these pushes to the bottom of the TDI were opportunities to buy. You could buy there, you could have bought there. You bought there, you could have bought there. Even this one was a buy. But as you can see, this is a G5, which is the previous video that I made. This is a G5. I call this G5 because it's used to recognize a trend change as well as being able to trade a counter trend within a trend. So this G5 was an entry for a trend change, of course, because we're at highs. All right. So you have the RSI represents price. You have the Bollinger Band, which I call G because it's gold. The gold baseline is above price, and at the same time, on price action, the 50 moving average is beneath that. So it's the G5 is down in correlation from the gold being above gold baseline being above price is in the middle, and then the 50 moving average is under price. That's an indication that price is going to go down. Okay, and then you also have G5s to the upside, but I just wanted to show you that to give you some references to the video that I made yesterday. But yeah, this is a great way to trade. This also helps you to take trades that you normally would miss, like the major big moves. Let me see if I can find one. The big major trades that you don't have, that you normally don't get to partake in because that you didn't have any previous way to know what was getting ready to happen. Well, this strategy helps you with that. Okay, so we have this high here, and even with this, once it dropped beneath 63, you could have sold, right? Now mind you, we're on an hour chart. So once it dropped beneath 63, you could have sold for 1,400 pips, right? It came beneath 37. Once it came back above 37, you could have bought and held it to the high for another 1,400. Once it came back beneath the 63, you could have sold. So that's 1,400, and then whatever this is, another 3,200. So that's 6,000 pips in 4 days. And that's only because gold is volatile. Okay, so don't look at gold as it's going to be doing this forever. It really just started getting like this year, but nevertheless, it helps you to see bigger trades. And here's another G5 that is a temporary trade against the trend, but it was a good amount of pips. Okay, you got the price, which represents RSI represents price here. You got the gold baseline above it. You got the 50 moving average beneath it. It's saying it's going to go down. That's 1,000 pips right there. But because the moving averages have not crossed, it's so many things. Like, you have to learn how to take all these different ways to find trading opportunities and blend them to make the perfect situation where you know how to take advantage of the market. Okay, it's so many ways that you can do this, but obviously it comes with what your desire is, what your level of contentment is, and what your overall goals are. My goal is to be able to trade whatever, be able to see different ways to trade, and not be confused as to which way I should go. We only got 2 ways to trade: buy and sell. Okay, but to get there are multiple ways. Just like in basketball, there are multiple ways to score. You can score from 3-point, free throw line, layup, technical foul, all those different things. You need to learn how to maximize your potential if you want to become successful in this endeavor we call trading. This strategy works for everything, as long as you can use the TDI. And this is the TDI I've been using for years. Nothing is new. Moving averages is what I've been using for years. Nothing is new. There's no news, there's no indicators, anything. Even if you don't have the TDI, if you have the RSI, which I know the RSI comes with MetaTrader 4, MetaTrader 5, the TDI. You have to figure out how to set it up, but the RSI can be used as well, just by knowing, having these levels, letting things play out. Not being in FOMO mode. All right, we got this 50-50 situation where the gold baseline cross above the dotted baseline, which means everything from here is buy until that breaks. Once the RSI breaks the 63, now you have an entry for a sale. And like I said, it's pretty nice. I mean, it speeds up your profit potential, and it gives you the ability to trade without stress, because you always have a way to make any chart make sense. Whether it's a big chart, whether it's a 15-minute chart, you have a way, just by knowing how to trade using the levels, you have a way to maximize your day. All right. So for example, this day here, September 24th, out of the gate, you have this trade for the sell. Right. Then you have potential for a buy. Price comes back above the 37. You could have ended that for 200. Price comes above the 68. 68 comes back down. Comes above the 63 twice. Once it comes beneath the 63, it gives you this, and then it gives you a G5 right here, which is gold above price, 50 moving average under price, and then it drops. So this, you have one, two, three, 4 trades, and easy, because it's gold. Yeah, I know for sure it's at least 500 pips. So that's 160, 220, which is 380, 140, which is 520, and then yeah, that's 1,000 pips. It's just by understanding that, understanding how it doesn't stop. It literally continues over until the next day. You have coming back across the 32, 37, right? You got in there, 200, and then like I said, it comes above the 63, comes under it. Once it comes under it, I mean, you literally have a deeper revelation of what's going on, which gives you the ability to be like a cat that plays around with the mouse, because they know every which way the mouse can go before they devour the mouse for food. So just want to show you that this is just trading between levels 37 and 63. As you can see, their levels are here. When I talk about that, these are the RSI levels, but this is the TDI, which is one of the ingredients of the TDI is the RSI. Yeah, and when you don't see that, all you have to, especially if you have the uptrend, if you have an uptrend, the Bollinger Bands are already way above the 37, which should give you even more confluence to look for buys. The moments that the RSI goes under 63 in an uptrend are not worth. You may get maybe 10 pips, but you're taking a chance on being stopped out by trading against a trend, especially if you don't remember that these are counter trend trades in an uptrend. So it started off here. The Bollinger Band came above 37, and it stayed above 37 from here all the way to here. All right, but right here is where they give you a G5 for the sell. Right, but you could have every time from here, every time the RSI came out the bottom of the Bollinger Band was an opportunity to buy. You bought that, you bought that, you bought that. Even with the G5, it still bought. You had 1, 2, 3, 4 opportunities to buy. All right, and it works the same thing for a downtrend. When the clouds were beneath 63, every time the RSI comes above the Bollinger Band, is an opportunity to sell. So that's all. I'm not gonna make this an extended video. Just wanted to show you a different way to trade using the RSI levels of 63 and 37. All right, y'all have a great day.